What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers up here on the left. As always, we have our broad market, our core list of companies, and this week I've got 9 trade ideas to share with you towards the end of the video, so stay tuned for that. Many of these ideas were recommendations from our Discord members. If you want to join the Discord, it's completely free and linked down below in the description, along with all of our other resources, so check that out. The markets continued to do a whole lot of nothing really into the end of the week, even though we had big news on Thursday, so let's dive in and talk about it. Jumping into our SPY weekly chart, talking about candlestick structure and location, as we always do. For structure, we certainly have another hammer-esque type candle. Maybe you wouldn't consider it one, maybe you would. Our lower wick and body are about the same in range there, but nonetheless, it is still a lower wick, so buyers stepped up off of these lows and were able to close, of course, up there towards the highs, which strikes me as fairly bullish, especially happening at all-time highs. In terms of location, right, we did take out the 3-week highs here, and we closed above it. The other thing I will point out in terms of range and location is this, of course. We've been using this red candle sort of as a gauge, and we finally broke out of that overall range to the upside. And then lastly, we do continue to form higher lows. We only retraced about 50% of the prior week's range, which is completely healthy. And of course, this is all happening on slightly increased green volume down below. So moving into our daily time frame to talk about tradable levels into the upcoming week, I think to the upside, we still have to consider that if this is the range that we're truly breaking out of here, we could potentially see that 426 mark, which is the doubling of the range. And that's just our basic eyeball test. After that, to the upside, you're obviously going to play blue sky levels, $1.5 intraday levels that do form. That's if we can take out the all-time high at 424.63. Now, on any pullbacks, I would be watching very closely what happens at 423.22, and that's because if we trade back underneath that, basically Friday's low I'd use as a line in the sand. If we trade back underneath that, we're failing back into this 4-day area of balance and range. And what we know is, of course, on the failure back in, we always target the bottom end of the range, which in this case happens to be a gap fill from about 420.32 down to 419.96, it looks like. So very close to that 420 whole dollar. I would just use that as a benchmark. Anything underneath that, and of course, the next line in the sand has to be here, 50 SMA and 416.50. That one's going to be pretty critical because on any trade underneath that, essentially, we have just a larger look above and fail of this range, right? So that would look something like this. Failure back under here would definitely probably bring us down to fill the gap underneath and revisit that 410.50 area of support. Now, as we discussed on the weekly, things still look fairly bullish, and I just bring up these scenarios as potential, right? It's not like we have to go lower here because we're not just rocket shipping into all-time highs. Of course, on Thursday, we would have expected that we would have seen a little bit more action, right, with the CPI number as well as the Fed speaking at 2, but it was really lackluster, right? We went a little higher, we went a little lower, and ultimately closed the day kind of flat, right? So to me, it just looks like people are, either taking the summer off, no one's really excited about pushing this into all-time highs, and because of that, we are starting to build a little bit of overhead supply, right? As people get long in here, and, they are technically getting paid. If you got long in here, technically you're up, but not by a whole lot. It's not like we've seen a meaningful breakout to the upside, something if we were to scroll back like this action in here, that, longs would be happy with that. But longs here are feeling, this is a grind. It's kind of slow action, which of course has to bring into question the, the possibility for a liquidation break. If we get sort of that domino effect, some people decide to liquidate, close their positions. They're just, thinking this isn't worth my time. It could set off that, as we said, domino effect to bring us lower and potentially fill that gap underneath. But again, I only say that in terms of a scenario. I do think as the chart currently sits, the path of least resistance is sideways to slightly higher into blue sky territories. Jumping over to our Qs now, these look slightly better, right? And the reason being, of course, is that we are starting to see a little bit more of a meaningful trend develop as opposed to just sideways action where we might gap up slightly higher and then, the next day, same thing, and that's what's leading to the upside action. Instead here, as we've sort of highlighted, we're seeing some trend days, some follow-through days, and I think the obvious target just has to be the all-time high, especially with SPY moving to its all-time high. So the first target has to be at 342.36. After that, we're monitoring for continuation, $1.5 intraday levels that do form here inside of our Qs. On any sort of pullback, again, you might expect this range to sort of continue. So 335 rather is going to be the critical line in the sand low. You would want to see that hold up on any retest, and it would probably be a buy, honestly. If we do something like this and draw in a shorter term support trend line, if we were to liquidate there on Monday or Tuesday, again, that's probably a buy right at that 50 SMA as well, forming a little bit of a super support. So that's what I would be looking out for early on in the week if we do get the liquidation before the all-time high. After that, to the downside, say we do liquidate there, and again, remember, I'm not calling for bearishness, I'm talking about potential scenarios. If we do liquidate and don't get a meaningful bounce off of that to form a new higher low, the obvious target after that has to be the flag lows in here at 331.75, and then the low from the fake break to the downside at 328.31. And last but not least, we have IWM Russell 2000 and our small caps, and this looks fine as it sits, right? We were talking about the fact that we got the break of the resistance trend line, saw some follow through, pulled back a little bit, completely normal, healthy action, and now it looks like we could make that run, again, if the rest of the market is headed for those all-time highs, for IWM to revisit all-time highs. So 234.53 is that target after that $1.5 intraday levels that do form. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up on the fact that we have so much range every single time a new video anything that sort of takes us up and out of this box on some meaningful action. Again, I think, based on our range doubling rules, if we just clear that up and do something like this, so we'll draw that range back in and give ourselves an eyeball test to the upside. I mean, clearly it's over 250, so 255 would probably be the technical true doubling of that range. I'm not calling for that to happen in 1 week's worth of trade, but again, after you've seen a long period of consolidation and balance, generally what you see is a period of excess before the market tends to find a new period or area of balance and two-sided trade to begin. So that would be the sort of expectation here on IWM on a break of the all-time high from a longer-term perspective. To the downside, if we can't really get going, say the rest of the market continues to balance, SPY doesn't really see that meaningful follow-through to the upside, maybe IWM remains in this upper range. So you're looking at 230 to hold as support, basically Friday's low, and more consolidation in this overall area. Again, that would be, in my opinion, bullish, forming and finding value higher as opposed to failing back down beneath the resistance trend line. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. So jumping right into Apple, clearly a new 4-day balance towards the upper end of the overall range, being defined as something like that. A couple of fake breaks of our 128 sort of pressure cooker top. So on the retest this time, I'd just be a little bit cautious, right? I would expect it to go, but now that our 50 SMA is slightly higher, just look for that to potentially be an area of fake break, right? If we get into that, probably start to trim that position, maybe hold on to a few runners. If we do take it out, obviously the upside target is there at 131 the whole dollar and back into this overall range that we experienced in the past. That's quite a ways for the upcoming week, so that'll cap off the upside. To the downside, obviously the support trend line is in play. We have technically been forming new higher lows, but on a retest here, I would expect to fill up the triangle and take it all the way down to 123.06, just failing repeatedly to get up and over that 128. To me, that would strike me as more bearish, a retest at least of that support trend line. So be aware of that. Just psychologically, who's tired, who's fresh. So to me, on a retest and failure here, bulls are going to be exhausted, right? So it should technically go lower to the bottom end there, 123 as discussed, and then the gap fill is underneath. Kind of an aggressive target, especially if we're bullish on the broad market, but that is Apple. Netflix strikes me as, again, more bearish than Apple at least, and that's of course because now we have all of this overhead supply. So this rejected once here, formed a new overhead supply. This rejected, went lower. Same thing here, a couple days of balance, and now we're trading lower. So again, to me, even if the market's screaming to the upside, Netflix wouldn't be my first choice to go long on. We do have a resistance trend line that's fairly steep. Looks something like this. Again, if the market's bullish, maybe this breaks it sideways through time, but just overall, this wouldn't be my first long choice, right? To me, it looks like any weakness in the market would send Netflix down to about 478.13. As we know, that's a critical daily flush point, so underneath the target would be 465.59. Nothing's really changed there. And again, I wouldn't really battle it long through these areas of overhead supply, so 493.85, and then up here towards that 500 round psychological number. It just, unless there's a clear, overwhelming breakout in Netflix and we see a massive influx of volume, it wouldn't be my first choice to go long, but those are the upside targets. 50 SMA is now lower than the 200, so is some serious resistance up here around 514.04, but I wouldn't expect we make it there in the upcoming week of trade. Jumping over to Tesla, quite clear that our secondary resistance trendline made sense. We did, back off and resist off of it a couple of times this week. And again, I don't really think anything's changed here. A lot of sideways action around that 200 SMA. Only really getting bullish if we can take out that 630 and start the new uptrend, right? We have higher lows. We would now need a new higher high, and the perfect target would be sort of that 50 SMA up there around 653.30 as it sits right now. So that's potential for the upside on the break of the resistance trendline. As it sits, I wouldn't, again, be my first choice to go long unless there's a clear intraday setup here. To the downside, only getting bearish probably underneath that 600 round psychological number, 595 area. You can see that was pretty much the balance lows there. We had a number of inside bars on Wednesday, Thursday, and Friday. So underneath that area, could see some liquidation to the top of the gap, maybe fill it from 571.50 down to about 566.70. And then underneath that, as we know, this is critical support here around 547.82 based on this low from in here. So things could get ugly underneath there. It hasn't proven that the downtrend is broken and the new uptrend is formed. So I would play this one cautiously. Again, really watching for intraday setups only until we can clear either here or break down under here. So Alibaba, thank you. We can finally clear off some of these yellow lines. It did fill the gap to the downside, so we'll get rid of that. Clear downtrend remains in place. The obvious target here is the low end area of support we have at 209.61. Call it 210, a whole dollar. If that breaks, look for the downtrend to continue and bring us all the way down here to about 204.27, 204 quarter. If that flushes, again, that's sort of based on the controlled nature of this down move here. I wouldn't expect it to get too nasty, but if it does break, we're looking at 200 psychological in between, but ultimately 196.50 as the next area of support. Again, based on the fact that we had 5 down days in a row, I'm not much of a candle counter, but I wouldn't be surprised if we see some sort of dead cat bounce here. Just a little bit of reprieve from the selling activity, but probably not enough to break this resistance trend line. Anything over 215, maybe start to get a little bit bullish for intraday setups. I'd say your first target's probably in here, right around 219.50, 220-ish area, but not a whole lot more than that here in BABA. So Facebook strikes me as doing fine. Again, we've talked about this chart looking better than others. This sideways consolidation inside, all inside bars really, based on Monday's range. Hammers forming here off of the lows at that 328.60 mark. To me, it looks good for a potential bounce here to revisit that all-time high. Let's just mark that off. Of course, that resistance is going to be probably slightly lower, up there around 337.50. That's what I would use as a heads up before the ultimate all-time high at 338.30. Anything after that, blue sky levels as always. The flush would really only be underneath this sort of flush point. Really, it's 3 days worth of lows now, as discussed there at this 328.75. If we take it out, obviously there's some room to run lower. I would really focus on, of course, this low in here at 323.40 after that support trend line. They may coincide depending on time of week, but as we've said in multiple videos now, that's probably a buy here, especially with the 50 SMA catching up. We did make that higher high, so that would be, in my opinion, a safe bet. The risk to reward would make sense to get long around that area. So NVIDIA, absolutely wonderful looking chart. Caught the breakout there on Friday with the Discord members. Fantastic trade across everyone. So congrats to you guys. We were playing the bull pennant, right? Something that looked like this. We were taking out that sort of resistance trend line in the pre-market, and boom, we just sort of went after a very small and tiny gap fill. So to me, again, just day one of sort of a breakout. Maybe if we take out the high here, right around that 717.50, look for new longs. I'd be very, very tight with them. Use a very tight stop loss. Obviously, when you're buying all-time highs looking to sell slightly higher, you got to be disciplined, right? This could very easily do something like this and return back into the flag range, although, I don't think it's going to. It could, right? So always be cautious when buying all-time highs. An area of support I would want to see hold if we do move back into the flag is at 688.37. Anything underneath that, we talked about this as an intraday level at 676.50. With the split coming up, I hope there should be some more liquidity in NVIDIA. And remember that on any failure of this or this, it's probably going to look something like this off of the breakout point from in here, right at 648.70. So again, just be very cautious if you're still trying to take this into blue sky territories. Use a very tight stop. Microsoft continues to look good. We did accept and close inside of the gap. So to me, the path of least resistance is, of course, sideways to higher to fill the gap up there at 260.25. After that all-time high is certainly in play. Blue sky territories, again, if the market overall is making those moves into blue skies, look for this to revisit the all-time high. Failing back out of the gap, in my opinion, would probably put this area, the breakout area from in here, into play at 252.86. I'd place less emphasis this time on our 254 quarter, so we'll just remove that one. This sort of breakout area from in here, again, we did try to hold it there on Wednesday as support. That's simply why I would focus on that more, right? We have the 50 SMA, which could coincide as well for a super support. It would technically be a higher low and a potential area I would be interested in buying there. On a failure to hold that mark, obviously the gap underneath is in play from 247.59 to down to 246.37. So Amazon finally getting some traction and closing above our 33.10 mark. Again, that's in here. And with the small inside sort of doji there on Friday, I would expect higher prices, right? We're pretty much accepting this breakout as opposed to rejecting it and retracing a bulk of this overall range. So again, just remember the distance we've already traveled. Be cautious of that, right? It may need another day of consolidation before getting moving again, but we have been in this period and we're starting to resolve it to the upside. Your upside target first would be at 34.30. After that, up here at that all-time high, 35.52 quarter. And then after that, blue sky levels, right? This can be a mover. I mean, look at this move that happened in here. So it's not like that's off the table, right? That certainly could be in store, although I don't really think it's likely, right? So watch and just monitor for continuation higher here. On any failure back into the range, as we know, we would just play this with the target being back down here around 31.8236. That would be a look above and fail. And obviously we target the low end of the balance, maybe a bump in the road here at 32.50. Before we get into these trade ideas, if you have not hit the thumbs up button or subscribed to the channel already, go ahead and do so now. First idea is on TTD for the trade desk, and this is experiencing a 10-to-1 split, meaning if you have one share, you'll be left with 10 and the price will be cut into tenths. So trading about 600, that'll drop the price to $60 a share. And again, if you have one, it will turn into 10. You can do the math to see how many you will have after the split. To me, I thought this setup was interesting because not only do we have the catalyst of the 10-to-1 split coming, which obviously people know about, people are bullish about that, but we are now trading back above this sort of critical flush point, right? So to me, it looks like we're accepting higher here. We have a number of days forming balance here. If we take out these highs, I would say, looking left, there's really not a whole lot of overhead resistance until we come into this area here, which is at 750. Stock after the split will be trading around 75 at this area. So 60 to 75, about a $15 move could be on the table here in TTD. I wouldn't really be interested if on the split, we see a huge bearish reaction and we sort of flush underneath this area of lows. Just to put a value to it, that would be sort of coinciding with the gap down high, right? Just around our 568.23. Again, that would be $56.80-ish after the split. So bullish here in TTD on the recapture of the breakdown point. Next up, we have Real, and this is an extremely similar setup, but at a much cheaper cost. Okay, so $20 a share here. And again, you can tell we have this very clear breakdown point, huge gap down on earnings. Now we've retraced, almost the entire gap. I would first be very skeptical, right? Wait for some consolidation, especially around these two critical moving averages. But if we can turn this into a daily bull flag, form a nice clear breakout point, pressure cooker top around 2050, 2017, 2020, somewhere in there. Obviously, again, look left, not a whole lot of resistance. I'd say the first target is really up here around 25 psychological. So some room to run here in Real. Next trade idea is going to be on ADT. ADT is forming just a very clear pressure cooker top with 4 equal highs, just about really 3, but call it 4, right around that 1175. Now, do mind the sort of range and y-axis on this one. It's not huge, right? So if you are trading it with shares, you're going to have to take some size. If you're trading with options, they will just be cheaper and your range is going to be a lot less. So don't expect a huge move out of ADT, but with this consolidation towards the highs, very clear pressure cooker top at 1175, I would expect a breakout just based on sort of measured measured move. If we go the distance of the flagpole from the low end of the consolidation, just eyeballing it, that takes us just to about 1250, maybe slightly higher than that. That's what I would expect here out of ADT on any clean break from the setup. Obviously not interested if we break down underneath this sort of 1140 mark, the low end of this first day of consolidation. Next trade idea is on Peloton. This one is a clear bullish engulfing bar. I mean, look at this thing on Friday, right off the 50 SMA. Looked like it could have broken down actually with that lower high, right? We had this lower high, but no, full bullish engulfing bar here, taking back 3 down days. I would watch just for continuation, right? If we can sort of take out that high there, right around 115, just watch out for that 200 SMA and then some room to run up towards these highs in here, putting a value to it that's right around 125, we'll call it, just to round off there. So some room to run overhead here in Peloton. If we open up inside of that range again early on in the week, watch for consolidation in that upper third. As we always discuss, the trade idea can just, remain as an overall idea as long as we hold that 50 SMA, but ideally it holds up in that upper third of the engulfing bar from on Friday to remain bullish. And again, we talked about that upside target. Next up, we have DDOG, Datadog here. And this one is sort of, depending on how you look at it, it's either, a sideways channel pressure cooker top or an inverted head and shoulders, right? So if I do something like this, there's your neckline. And if we draw on our shoulders, there we go. So we get something like this. Here is your head. Here is shoulder 1 and shoulder 2. I like this setup, especially holding that 50 SMA, and shoulder 2 is technically higher than shoulder 1. So to me, that gives me a little bit of extra confidence in the inverted head and shoulders. If we take out this 95.67, again, look left, not a whole lot of market structure in this area here. I mean, up there around 119.50 is a bit of a stretch. I'd probably monitor for continuation, but there's really not a whole lot of resistance. Maybe we'll call out this area from in the past as well, closer to about 108. So watch that one first, but really some room to run here in Datadog as well. The expected move, if you want to just be technical about it, is technically this distance here. And just again, based on eyeballing it, that takes us right to that area of resistance we pointed out, right around 119.50. Next trade idea is on Snapchat. This one is back in play. We've been sort of watching this one for a while. I just wanted to re-alert you to the fact that 64.21 pressure cooker top is in play once again. First target's at 68.81. Technically, you could call it once again, just like Datadog, an inverted head and shoulders with our neckline being there. I'd like to just call it a pressure cooker top, whatever. If we take it out, obviously first target here and then all-time highs after that. Not really interested on a breakdown of our 61 area of support. This one right in here. Next trade idea, Intel, INTC. This one is, again, we've sort of been going with the theme of the inverted head and shoulders. I would say this one's not as clear, but what I like about it is this, overall period of acceptance here off of the lows, off of the 200 SMA. We had a chance to break down on this day here, but it just didn't happen, right? The market found no acceptance lower, traded back into the range. And to me, it looks like if we take out 58 the whole dollar, I would at least target the 50 SMA and then the bottom end of the gap, which to me, just based on an eyeball, is right around 60. Yep. Perfect. And then monitor for continuation into the gap fill up to about 62.23. Again, based on the overall range and what this experience is, I wouldn't say it has to do this in a week, even 2 weeks. It could be a slow grind up into that area. Next trade idea is on Oracle. This one's been on absolute fire, and it is potentially a pullback play. Regardless of how you sort of look at this one, we'll clear those two lines up. It could be at a support trend line if this pullback continues, right? We could draw it in from here. This gives us something like that, right in line with the 50 SMA, or we could draw it in something like this, slightly above the 50 SMA, or you could draw it in like this. So there's a number of ways to draw in this support trend line. Obviously, the trend is up here. We did form a new higher high, clearly, after this nice breakout here. Pulling back, retracing some of the range isn't the end of the world to me. As long as we kind of hold on to this area in here, I would just eyeball it to $80, and that coincides with a support trend line or a 50 SMA touch. That would be a first touch buy, in my opinion, here on Oracle. Wouldn't be interested if we break down and close below that 50 SMA. Reason I think we could get there sooner than later, of course, is because we have earnings. So just keep that in mind if you're an options player here. Last trade idea is on Disney. Okay, Disney is it was on fire for such a long time, and just like the rest of the market, it's sort of gone sideways for the last 6 months or so. So to me, now that it's sort of pressing into its resistance trend line, let's actually draw this one in officially here. If we do something like this from the high, bring it on down like that, you'll notice that we have touch 1, touch 2, 3, and now 4 in a very close proximity of time. And whenever you get that touch, secondary touch in a close proximity of time after forming especially a nice higher low, right? To me, that's signaling that we're putting some pressure on the bears here to remain in the trend. If it were to take out that area, I would just be trading up towards 185, probably this area of overhead supply resistance in here around 190 as a, more overhead upside target there, stretching a bit. So, right, daily bull flag, putting pressure on the resistance trend line. To me, taking the break there every time. First target, if you're a day trader, would be up here towards the daily 50 SMA, as well as the prior pivot high right in here, 180. So that being said, that's going to conclude this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, definitely let me know down below in the comments section or by simply leaving the video a thumbs up. I wish you all a green trading week, and I hope to see you in the midweek market update on Wednesday.